Bring to order the subcommittee on audit of the Committee on Fiscal Affairs. We have two items today. One is the approval of the minutes of the March 6th, 2012 meeting. I move approval. Do I have a second?
Second.
Any conversation, comment, anything? All right. All those in favor signify by saying aye.
Aye.
Opposed? Abstentions? It carries. We are here today for the exclusive purpose of receiving and accepting the audit prepared by KPMG, the financial audit. We have with us today Shelley Massey, who is the partner responsible for the City University of New York account at KPMG, and John, please forgive me, Usanio, who is the senior manager. And we welcome them here and ask them to present the report. I stress that there are many slides. I trust you'll pick the ones that are necessary and essential. and we'll go from there. And so I would turn it over, I assume, to Shelley?
Yes.
Okay.
And I apologize, my voice is a little weak. I feel perfectly fine. I just have no voice.
Actually, it's not terrible.
It's not terrible. At certain points, it dips a little bit and you won't be able to hear me. But I did want to introduce John. I think this is the first time that you're seeing him. If you remember, for the last 5 years, Erin Shimbari was your senior manager. And she recently accepted a 3-year rotation to our Montvale office. And she is working on our e-audit tool, as well as standardizing our audit approach. So I'm happy to have John. He just finished a 3-year rotation with our Department of Professional Practice. So he is back serving not-for-profit organizations, including higher education. So we're doing things a little bit more high-tech today. We do have a presentation up on the board. So I'm going to begin. This is the results of the audit of the financial statements. And John and I are going to be going back and forth and going through this with you today. So first, I'm just going to touch briefly on slides 3, 4, 5, and 6, going through the responsibilities. The key responsibility for the university is preparing the financial statements in accordance with generally accepted accounting principles. So management does have the responsibility to prepare the financial statements and also establish and maintain an effective internal control system. So we do audit that, and we want to ensure that the transactions that are flowing through the university's financial statements, there are proper internal controls to ensure that the transactions are being recorded properly. The audit subcommittee's responsibilities are one of oversight of that financial reporting process by management, and also promoting continuous improvement over the financial reporting process. And then we have our responsibilities. We have more responsibilities than anybody else. But first and foremost, we do conduct the audit in accordance with professional standards. Those professional standards are auditing standards that are generally accepted in the United States, as well as government auditing standards. And government auditing standards are applicable because the university receives federal student financial assistance, and we do conduct our audit over that, which we will report back to you, and the financial statements are included in that package. We are going to be issuing an unqualified or clean audit opinion on the university's financial statements. With respect to the financial statements, and I have mentioned this before, we do not audit the foundations. They are included in the university's reporting package. They are discretely presented component units, so they are included on separate pages. So you'll notice that there is a balance sheet for the university, and then the next page is a balance sheet for the aggregate of the component units. We do state that in our opinion that we rely on the foundation's auditors' opinions. We do receive all the audit statements. We do review them for reasonableness. And we do confirm with the foundation's auditors that they are independent with the university, because of the fact that they are rolled up into the university's reporting entity. Not only do the auditors need to be independent of the foundation, but they need to be independent with the university as well. One other thing to note on the opinion this year, there are 2 additional paragraphs that we have included that relate to new accounting pronouncements, GASB 63 and GASB 65. And John is going to be covering the impact of those on your financial statements in a few future slides. I guess the other important thing to note that we are responsible for are, as I had mentioned, we do test the internal controls over the university's significant transactions as well as fraud. And we would also have a responsibility of informing you whether or not there were any significant deficiencies or material weaknesses as a result of the test work. And we did not note anything, so there is nothing to report to you today. I think that takes us to audit status. So we are sitting here today on December 18th, maybe a little bit later than we have in the past, but quite frankly, the audit went very smoothly. I think we're about 2 weeks behind where we really should be, and I attribute that to the storm. I mean, I know CUNY was out of power for about 3 or 4 days, but there was many people on my engagement team, myself included, that were out of power for 2 weeks. So it did hurt us in trying to complete the audit and just, having a place to work. And so, yeah, that's where we are today. But again, quite frankly, it went very smoothly. And I think the only thing that's pending right now is the management representation letter. So we have concluded all of our other down-to-date procedures, and we do expect to receive that, I'm guessing either this evening or tomorrow, and we will be releasing the financial statements tomorrow upon receipt of that.
We're just awaiting the Chancellor's signature on that, so it's upstairs.
It crossed my desk a couple hours ago.
Needs one more signature. All right, that takes us to slides 10 and 11, where we have included our audit areas of focus. So on these 2 slides, we have included various areas where we spend a good chunk of our audit effort. And quite frankly, a lot of these areas relate to management estimates and judgments. So there may be some use of specialists on KPMG's engagement team that I will be covering as we go through these. But the first relates to the classification of assets, liabilities, and net assets. The balance sheet of the university is required to have a classified balance sheet, which means that assets and liabilities are required to be shown in their current and non-current presentation. So we do look at that, and we look at supporting documentation to support the current and the non-current classification. With respect to net assets, they are classified as either net investment in capital assets, restricted or unrestricted. And again, we receive support from management on their classification of equity into these categories. And specifically for net investment in capital assets, there is a calculation that management does to support the various assets and liabilities that meet this category. And we do look at that for reasonableness. We look at the presentation of scholarship allowance and expense. A portion of this is shown as net tuition revenue, and a portion of this is shown as an expense, depending on what the use of the scholarship is for. And for both of those, we had no exceptions to our audit work. The evaluation of student accounts receivable is approximately $139 million at the end of the year, and management does calculate a reserve for uncollectible receivables. We look at the reserve to ensure that it is consistently calculated with the prior year and that it is reasonable. And we do look at the aging of the receivables to determine whether or not we feel that the reserve is adequate. The valuation of the other post-employment benefit plans, OPEB, is approximately $427 million at the end of the year. The university has an outside external actuary that assists them in calculating this using various assumptions and actuarial calculations. This is one of the areas where we have a KPMG reviewing actuary that assists us in looking at those assumptions. And he concluded that the assumptions were reasonable. We also perform ourselves, we look at the census data and look back at employee files to ensure that the census data is accurate. And this is important because the census data is used by the university's outside actuary in calculating the liability. So we want to ensure that the information that's being provided to the actuary from the university is complete and accurate. And again, we had no exceptions. Evaluation of investments. There are certain funds that are non-marketable, approximately 77 million, and we do receive audited financial statements for all of these funds. However, the audited statements are audited as of December 31st, 2011, and your financial statements are as of June. So we do receive the audited statements. We get comfortable with the net asset value as of December. And then we have to perform additional procedures to gain comfort over the activity from December until June 30th. So we're looking at cash transactions, purchases and redemptions of those funds, and then the net impact is the unrealized appreciation or depreciation. And we're able to utilize benchmarks that are available to us from external parties and conclude whether or not we feel that the appreciation or depreciation of the fund is reasonable in comparison to the benchmark. And if there was anything that was not considered to be reasonable, we would then need to go back to the university and have the university go back to those fund managers to find out why. But everything was considered reasonable when we did the benchmarking analysis. The last area on this slide is valuation of interest rate swap agreements. A few years ago, there was a new accounting pronouncement that required the university to record the fair value of these swap agreements on the balance sheet of the university. They do receive the valuations from their counterparties. We do confirm with the counterparties that the evaluations exist and are accurate and are complete. But this is again another area where we have a KPMG specialist help us to look at the measurement of the valuations of these swaps. And again, no audit adjustments in this area. There were certain bond transactions this year. The university has issued just over $133 million of debt, and we did look at supporting documentation to support the values of these new issuances and the recording of that in the financial statements. The next item is review of tax compliance. While the university is a tax-exempt organization, there is still a requirement for the university to meet that tax-exempt purpose. We do have a tax manager in our engagement team that does look at that for us and provides us with a conclusion memo to state just that you have continued to maintain your tax-exempt purpose and status. The last item is review of information technology controls. We have IT partner, manager, and staff who are on our engagement team who look at these general controls every year. And we did pay particular attention to the new schools that did implement the new student information system and looked to ensure that the information had transferred appropriately from old system to new system. And I guess actually the next slide sums up everything with respect to our audit procedures for this year. And we had no audit adjustments noted. And I was happy to tell management that this was the first time in, I think, the last 5 years that we have not had any audit adjustments. So kudos to Tom and Miriam and Barry's team for, having a general ledger that we did not have any exceptions to. So I think that is great. And I'm happy to now turn it over to John.
Give her a break for a second.
Yeah.
The next slide deals with accounting policies and practices, and the significant accounting policies. The significant accounting policies are disclosed in Note 2 to the financial statements. I'm pleased to report that there were no changes to any significant accounting policies from previous periods, with the exception that there were 4 new standards that were adopted by the university during 2012. The first related to GASB 62. GASB 62 really just had no impact on the financial statements, but it did cause the university and ourselves to relook at the disclosures that were done, that are contained in the financial statement footnotes, and determine the adequacy of those disclosures. We found no additional disclosures that would need to be required. GASB 63, as Shelley alluded to earlier, in conjunction with 65, did cause an impact to the financial statements. In essence, GASB 63 changed the classifications and nomenclatures that are on your statement of net position now. Previously, it was called statement of net assets. You did have a net asset category. Now it's now called net position. So you have a net position statement and a financial statement position. GASB 64, on the next slide, in essence deals with your derivatives and swaps. As the university didn't terminate any swaps, there was no impact by adopting this standard. To the extent you do terminate any swaps in the future, this will be something that will need to be contemplated in conjunction with those terminations. And finally, GASB 65, again, as I mentioned, did have an impact to the financial statements. GASB 65 really did two things. In essence, it took the classifications and reorganized the recognition of certain things that were previously in assets and liabilities. And this primarily related to your deferred debt refundings. And the bigger part, it caused a change in the, or a restatement to your changes in net assets. 51.3 million of deferred financing costs were required to be written off. As of June 30th, 2011, those were included as other assets. They are no longer there as of 2012 as a result of this early adoption.
We didn't restate anything.
Yes.
You did.
So we restated last year's?
Well, it's a one-year presentation, but yes, technically, the 51.3 million was a restatement of opening equity.
Thank you.
And that was a requirement to do so within GASB 65. It required the university to restate the earliest period shown.
Thank you.
Okay. Slide 15, again, deals with our reports and other deliverables. In addition to the financial statements that you have presented here, there are other deliverables that we will be presenting. The senior college audit report has been compiled and is currently being reviewed by management. We will present that at a future time. There is a single audit or OMBA 133 financial statement audit that is required. That due date is March of 2013. The majority of the test work has been completed in conjunction with our financial statement audit. We anticipate coming back to the committee sometime in February, I believe is what we're anticipating for its review and presentation. In addition, one other thing in conjunction with the A133, last year I believe there were 2 major programs. This year you have one solely on student financial aid that will be reported. So that is something that's a little bit different. Management letter comments have been compiled as well. We are working through management's responses to those, and those will also be presented, I believe, at the February meeting. So that'll be another deliverable that you will see within the next coming months.
Okay. This slide really just sums up the remaining required communications in accordance with auditing standard 114. So there's really nothing else to report here. Some of the procedures that we perform in order to get comfortable that there's nothing else to report are various inquiries that we have with university management, including the audit subcommittee chair, legal confirmation review, minutes review, internal audit reports. So through all of those additional procedures, there was nothing else to report to you today. Now, that was quick. I'm turning it back over to John.
The next topic relates to fraud risks. We're required to assess fraud during the audit. 2 of the fraud risks relate to revenue recognition and risk and management override of controls. In conjunction with revenue recognition, we perform certain procedures related to control test work at interim over revenue recognition, substantive analytical procedures. We review period and cutoffs to ensure that the appropriate period recognition, as well as doing test work over deferred revenue. As it relates to management override controls, this really impacts your financial statements in its entirety. We review significant estimates that are done. We test journal entries and any post-closing entries. Happy to report that there were no matters to report to you or any findings from the result of those two procedures. In addition, we also do various entity-level controls and entity-specific risks. We host, Shelley, myself, and other members hold meetings with various members of the committee, of management and the committee, to assess if they are aware of any fraud. Happy to report that there's nothing at this point that we need to report.
Just one thing I did want to mention, because it has gotten a lot of press in terms of all of the audit committees, accounting firms. Testing journal entries. One of the things that the PCAOB and other standard-setting bodies have wanted accounting firms to do is a little bit of a better job of testing the completeness of journal entries. Testing journal entries is an important control when it comes to the mitigation of the risk of fraud. And that is because a lot of manual journal entries can be manipulated by management if there's not a proper set of internal controls over the processing of those journal entries. But one of the things that's very important for auditors is to determine whether or not we're receiving a complete set of journal entries from management to be able to select a sample from. So this was actually an area that we changed our approach to this year, and we actually involved our IT specialists to sit down with the university's IT department to be able to accumulate a set of journal entries electronically from the system directly, instead of us trying to find all of the different places in the university where manual journal entry can take place, because there are quite a few, and that was always a struggle within the audit in the past. So I think that really did help the audit process, and it gave us a lot better comfort that the completeness of the journal entries was accurate. Okay. Next slide talks about the material written pieces of communication between KPMG and management, and they are included here. The first is the engagement letter that sets the scope and fees of our engagement to audit the financial statements and the single audit. The in-house legal counsel letter that we received from in-house counsel with respect to any open litigation matters. The management representation letter that we received from management prior to the issuance of the financial statements. And lastly, the management letters that John mentioned to you we'll be reviewing with you in February. The next slide discusses independence, and we are required to discuss with you and disclose to you that we are considered to be independent with the university, and KPMG does monitor this on an ongoing basis, and we have systems and processes in place within KPMG that does monitor our independence from a respect of non-audit services, as well as the employees that we have at KPMG, and monitoring the fact that there are no members of university management who have a close family member that work at KPMG. And lastly, a regulatory and accounting update. These are, well, there's one here, but there's going to be another one that I'm going to talk about that will be affecting the university's financial statements in the future. And the first one here is GASB 61. And this is going to be required for the university next year. I know I have brought this up, I think, at last year's audit committee meeting as well. And this does modify previously issued GASB statements that talk about the reporting entity of the university, which is currently really focused on GASB 14, which looked at the reporting entity in terms of blended versus discretely presented component units. Now, currently, your most significant blended component units are RF CUNY and CUCF. So by blended, I mean that they are included within the numbers of the university. So you cannot pick those out from within the university's financial statements. The foundations are discretely presented component units, and they are shown on separate pages. That this new accounting pronouncement is really looking at the definition of blended component units. And it is changing the criteria to add a financial benefit or burden relationship that must exist for them to be considered to still remain blended. We have spoken to university management about their preliminary assessments and our preliminary assessments focused on CUCF and CUNY. And at this point, we still do think that they will continue to meet the criteria to be blended. But again, this will need to be something that we'll have to take a closer look at, and management will need to provide a written assessment that will conclude that they will continue to remain blended. There will be some additional disclosures also for those component units that will remain to be blended. The one other item that I wanted to bring up to you, and it's not included here, originally I was really just thinking about things that would impact the financial statements next year. But there is another new GASB statement, it's GASB Statement 68, that looks at liabilities that the university will have to record when it comes to pension plans that are cost-sharing plans or multi-employer plans. And there will potentially be an additional liability that the university will have to record for those in the year 2015. But the other thing that is being discussed currently, and it has not been finalized, but it is being contemplated, is taking those standards that are going to be required for pensions and requiring them for your OPEB plan as well, which could be a very significant impact to the university's financial statements. There's a very significant unfunded liability currently that is not being recorded as a liability on the university's financial statements that may need to be recorded if GASB does require those same standards for the pension plans to the OPEB plan. So again, more to come on that. This is 3 years down the road. And that really concludes my presentation. I did have one additional slide on the Audit Committee Institute to let you know that that is out there. And I do think that Peter does receive some information from the Audit Committee Institute. And we also do have hard copies of additional attachments, right, that were noted here as well.
Shelley, thank you very much. Also for your thoroughness as well as your brevity. It's appreciated. Are there any comments or questions or our annual Professor Martell inquiry into materiality, anything that?
I would be remiss if I didn't continue to carry the flag forward about questioning. With regard to GASB 61, you're talking about the Research Foundation, correct?
Yes, that's one of the entities that's considered to be a blended component.
And the issue there is whether they would
still meet this criteria to be blended.
and then have to be separated. That would be an interesting exercise all by itself.
Mm-hmm.
I'm looking forward to that opinion. With regard to 68,
Mm-hmm.
That liability could be quite large.
Yes, yeah. I mean, the liability for the unfunded OPEB is included in the financial statements, and I was just talking to Tom about it, and I think it's about a 1.2
It's about 1-point-something billion.
billion. And I don't know the pension impact off the top of my head, but yes.
It's going to be very large.
Yes.
So we're going to have a going concern discussion next year?
Yeah. Well, it won't be next year.
It's 2015, Terry.
2015.
But this
But
is
I'll be
it's
retired
impacting
by
all
then.
governmental organizations. So this is not something that's just for
It's
kids.
just whether it's reported.
I understand, but once those things hit the balance sheet, it does affect things like credit ratings.
Okay. First of all, I have to say this is my third audit report, and this is the cleanest one that I've seen. And I think we would be remiss if, as trustees, we did not comment and congratulate, first of all, the entire financial operation in the university. Obviously, Senior Vice Chancellor Shaw, who will claim responsibility for this great result.
No.
Totally kidding. Associate Vice Chancellor Sapienza, but really University Controller Barry Kaufman, Miriam Katowitz, and Thomas Zhu. I think you really do deserve a ample amount of credit and praise for a very difficult situation and making all the complexities involved here come out clean. And I think that is absolutely spectacular, and we owe you all a debt of thanks for that.
Thank you. You're here.
Chair Pentela, if I can, I'm sorry to interrupt you. I just want to also, I really want to recognize, we've been very lucky here at the university to have an outstanding controller in Barry Coffin for the last 10 years or so. And Barry's retiring as of January 9th, 2013. And I think, this clean report that we got today was really, a testament to Barry's outstanding work and his contributions to the university. So I want to recognize.
I appreciate the
especially
intervention, and I will also say that he is a much more successful controller than he is a retiree. I hope this time, Barry, that you are a little more successful than your prior attempts at retiring.
Actually, to be perfectly honest, our intention is that he'll still be here about 3 days a week.
Okay, so he fails yet again.
Semi-retired.
But certainly the minutes should reflect our appreciation for the years of service and the quality of this report. And I think that's the very least we can do.
And over a jovial, not serious objection, we saw no reason to vote on this. We will accept the report and then present it with our endorsement at the full committee meeting. So if there are no other business matters, I declare this meeting adjourned.
Here, here.
Thank you. Thank you.